Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong level of previous monthly resistance, which is now turned support. Now, as the market is testing this level and rejecting it to the upside, we could expect more potential bullish continuation to be created away from the zone. We can also notice that from a pattern standpoint, we have a clear impulse and correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg, which shows us how we have a perfect 50% retracement lining up exactly with the previous resistance turn support, which creates a confluence of support at this level, which is in fact exactly the zone that the market is currently testing and already rejecting to the upside quite aggressively. So as we are rejecting this confluence of support, we could expect more potential bullish continuation for the market to go and test the high of this resistance level, which is exactly here. In fact, from here, all this previous move to the downside was created. We could expect the market to want to go and test this level again. So in the short term, we could expect some short-term bullish price action to be created to go and test this level. Going down on the weekly time frame, what do we see? Now here in the weekly, we can see that we do in fact have space from the current market price and the upside target. We can also notice that in 12 hours and 54 minutes, this weekly candle here will close. If it will close with this shape, so essentially a very long wick and a green body, we could expect the next candle to fill in the wick. Now, why is that? Because if you see a weekly candle like this, it means that on lower time frames, so for example on a daily time frame, you will actually see an impulse and correction, with the correction being exactly the wick that we see here on the weekly time frame. And after an impulse and correction, what we could expect is the continuation to the upside. This is the most natural movement of the market, so essentially the creation of impulses and corrections. So in a situation like this, we could expect a potential rejection to the upside and for the market to fill in the wick that we see here on the weekly time frame to go and test the high that we have here on the monthly time frame from which all this move to the downside was created. We can also notice that from a structured standpoint here on the weekly, we have previous weekly resistance that is now turned support at this level. In fact, from here, this previous red candle was created. The market then broke above the zone. And at that point, that previous resistance was turned support here. The market tested the level as support, started rejecting it to the upside. So in a situation like this, we could expect more potential bullish continuation. Dropping down on the daily time frame, what do we have? Now, before we speak about the daily time frame, first, I want to let you know that I have linked in description all the previous analysis here for USDJPY. In fact, I did speak about this pair quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we expected this rejection to the upside, and that is in fact exactly what the market did. Then from here, I made another breakdown explaining all the reasons for which we could expect this correction, and then from here, the continuation to the upside. And again, that is exactly what the market gave us. Then from here, I made another breakdown explaining all the reasons reasons for which we could expect this correction, and from here the continuation to the upside. And again, that is exactly what the market did. And I also spoke about USDJPY after the creation of this M pattern, explaining all the reasons for which we could expect this rejection to the upside. And you find all these previous analysis linked in the description, so you can go and check them out for more free education. Now, at the moment, what we can notice is that we did in fact have now the creation of a new impulse, this impulse here, and correction as already expected by looking at the weekly time frame. Now, as we have an impulse and correction, we could expect a continuation to the upside. The first thing to keep in mind is that if we want to measure this correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 50% and 0.618 Fibonacci retracements lining up exactly with this previous resistance turn support, creating a confluence of support inside of this area, which we could in fact expect this market to reject to the upside. We can also notice that if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market, and we check the data precisely for the JPY, we can see how with the last reports, net positions have been decreased quite a lot. We went from having minus 79k net positions down to now having minus 101k net positions. So we had a strong decrease of the net positions, making the JPY weaker, and a weak JPY is exactly what we need in order for USDJPY to create a potential rejection to the upside, because institutions clearly have been shorting the JPY, pushing USDJPY higher, which obviously is reflected here in the price action that we can see. So this confluence of support zone is definitely an area inside of which we could see more institutional shorting of the JPY, therefore institutional longing of USDJPY, which would further increase the probabilities of a potential rejection to the upside away from the level. So how we could be approaching this potential move higher? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97 one-time payment. And if you continue to scroll down, you can see that at the moment the time to join is almost expired with this offer. So I really suggest to take advantage as soon as possible before it expires and price goes back to normal. And if you continue to scroll down, you will see that directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. You can go and check it out. The link is also in the description at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.